Recently, Goldman Sachs has published an interesting report on rise of affluent Indian that mentioned that affluent Indian population is growing at a fast rate and expected to increase from current levels of 6 crore to 10 crore by FY27. It was an interesting report that discussed about the growing trend of premiumization in India and also mentioned about top sectors and stocks in India that can benefit from this premiumization trend. Maybe I can discuss this report separately, but for now, I want to discuss a company that can potentially benefit from this premiumization trend in India and worth keeping a close eye. Company deals in the luxury car segment of India and launched its IPO about a year ago. Company name is Landmark Cars. IPO price was about 506 rupee and today it is trading at around 821 rupee with a market cap of about 3400 crore. I also discussed it in one of my videos a few months ago when I covered stocks added by Goldman Sachs. Now in this video, I want to deep dive into Landmark Car business model, future growth prospects, company's plan to encash the opportunity along with key risk in the growth thesis. But before we begin, a friendly disclaimer that this video is only for educational purpose. It's not a buy or sell call and only useful for long-term investors. Now, not for traders. Alright, let's get started. Established in 1998, Landmark Car is a leading premium automotive retail business in India with dealership for OEMs like Mercedes-Benz, Honda, Jeep, Volkswagen and Renault. It's also a commercial vehicle dealership with Ashok Leyland in India. This slide gives a great picture of company snapshot. On the left, this map shows the presence of Landmark Car in India. Currently, it is around the northern and central part including UP, Delhi, MP, Gujarat, Maharashtra, then West Bengal. And they have recently forayed into Goa with MG Motors. Then you can see the brands and percentage share of sale. For example, Landmark Car has 16.4% share of sale of Mercedes-Benz in India, 5.5% of Honda, 24.2% of Jeep and likewise. This data is for H1 of FY24. The number below is basically the outlet count. Landmark has 21 outlets for Mercedes-Benz, 21 for Honda, 19 for Jeep and likewise. Company has also partnered with world's largest EV player BYD that has recently forayed into partnership with MG Motors, also coming up with Mahindra & Mahindra dealership. In total, company has 117 outlets in 9 states and 27 cities. It's the first listed multi-brand, multi-location Indian auto retailer. If you look at business model, Landmark is basically a distributor of luxury cars that has a presence across automotive retail value chain, including sales of new vehicles, then after sales service and repairs, including sale of spare parts, lubricants, accessories, then sale of pre-owned passenger vehicle and facilitation of sale of third-party financials and insurance products. Now generally a distributor buys the car from the OEM and sell it to end customer. So this is a working capital intensive business model. That's where in FY23, company has entered into a direct billing model with Mercedes-Benz, where Landmark Car would directly build a sale in the name of customer and keep its commission. So that would significantly reduce company's working capital. This slide gives a good picture of their revenue breakup for H1 of FY24. Their new vehicle sale contributed 77% in revenue. That includes sale of premium and luxury passenger vehicle, electric vehicle and commercial vehicle. Then after sales service contributed 20%, that include paid service, accessories and so on. Pre-owned vehicle contributed 2% and finance and insurance contributed 1%. If you look at the leadership, Mr. Sanjay Thakkar is the promoter, chairman and executive director of the company. He founded Landmark Cars in 1998 and has over 2 decades of experience in auto industry. Interestingly, now his son Ariman Thakkar has also joined the group in 2017, post his masters in marketing and strategy from University of Warwick, and now he is the executive director of the company. I really like this combination where you have a well-established family business by first generation and then the young blood of second generation carry forward that business to take it to newer heights. Apart from this, company has quite an experienced leadership team. You can go through the details on their website or investor presentation. Also, they have an experienced board of directors including Manish Chokhani, Gautam Trivedi and so on. Now let us try to understand the future growth potential in the company. Now if you look at the luxury car market penetration in India, it is about 1%. So this market is in a very nascent stage in India. However, there is a clear change in spending pattern of Indians. Premiumization is one of the biggest trends in India due to factors like rising disposable income and rising aspiration. Hence, the demand for luxury car is expected to grow at 14 to 16% CAGR for the next few years as compared to just about 8 to 10% growth in mass and premium car segment. Now, Landmark Car is consistently expanding its presence in the country by opening new showrooms and new partnership like BYD in electric vehicle, then partnership with MG Motors and Mahindra & Mahindra. Interestingly, company is not just limiting its business to new vehicle sale. Company is trying to cater to the entire customer journey. And one of the growth area for the company is pre-owned car sale. By the way, this pre-owned car sale market is even bigger than the size of new car market and is expected to grow at much faster rate. This slide shows a good picture of pre-owned car business where existing customers can get their car service and after a few years sell their existing car to Landmark and upgrade to a new car model. These certified pre-owned cars can be used by new customer. Now this pre-owned car market has been very unorganized where there is lack of trust to buy the pre-owned cars. That's where organized players market share is increasing sharply. In 2022, organized market share was about 20% and is expected to become 45% by 2027. And I think Landmark Car ability to serve customer across the value chain is something that would give them a good moat because their 25 years of presence in the business has resulted in strong understanding of customer demographics and requirement. Now the interesting part is that as the car sales are increasing, the after sale business of the company is growing. This also generates a stable annuity revenue stream for the company and also help in improving the company's margin. Now if you look at company's financials, its sales jumped sharply during 2018 to 19. However, sales fell down during COVID, but it again picked up in the last couple of years and company's operating margins have improved from 3% to current levels of 7%. As a result, company's profit before tax has also increased significantly, although in trailing 12-month company's sales and profits are down as compared to 2023. Company is consistently generating good cash from operations. Company's inventory days are also under control and cash conversion cycle is also quick. In terms of profitability, company commands a return on equity of 25% and return on capital employed of 20%, which is very good. Although the debt to equity is on higher side at 1.16. Now as far as valuations are concerned, company is currently trading at levels of around 820 with a market cap of about 3,400 crore and a PE ratio of 40. And price to sale of 1.06 with EV to EBITDA of 16. I think that company's valuations are looking decent, neither too high nor too low. Having said this, these are just early days for Landmark Cars. It's a very small cap company and the potential for business is immense. So you may want to keep a close eye on company's performance or probably consider an SIP route to add it systematically. If you look at shareholding, promoters holding in the company is reduced by around 3.5%. FI holding did increase but it has reduced in last 2 quarters. The good news is DIs have significantly increased their stake from 7.6% to 15.2%. There is a slight reduction in December holding. Public holding has reduced in 2-3 quarters but there is slight increase in December holding. If you look at recent trades, it shows insider selling but again the percentage sale is very small. Interestingly, Goldman Sachs is consistently increasing stake in the company in last 3 quarters. By the way, its shareholders also include 3P India Equity. In case you are not aware, 3P India Equity is an asset management firm started by leading fund manager Mr. Prashant Jain, who served as the head of HDFC AMC for many years in the past and had a fantastic track record. Although you might see a small reduction in the stake, but it's not because of selling. It's because of ESOPs given by the company that resulted in slight equity dilution. Now let us look at the key risk in the growth thesis of the company. So first risk is risk of economic slowdown. Since the luxury car segment is a discretionary spending, if there's a slowdown in economy, its sales may get impacted as people like to cut down on discretionary spends. So there's an angle of cyclicity in their business where sales are correlated with economic cycle. Having said this, the long-term growth prospects are still intact. Then second risk is competition risk. Although there are no listed peers in the segment, there's a stiff competition from unorganized players. Moreover, there's a risk of losing business to other players in luxury segment like BMW, Audi, Porsche, Jaguar Land Rover that are not part of Landmark portfolio as of now. Then third risk is working capital intensive business. Since except for Mercedes-Benz, company operate on normal business model of buying the car from the OEM and selling it, it's a capital intensive business and hence there will be risk if the working capital is not managed efficiently. So in this video we discussed fundamentals of Landmark Car, which is a small cap company with market cap of about 3,400 crore. It's a leading player in Indian luxury car market retail business. Considering the fact that premiumization is a big theme in India, luxury car market, which is just about 1% of total car market in India, is expected to grow at 14 to 16% CAGR. Landmark Car should be a beneficiary of this trend. Moreover, it's not just about selling luxury car. It's about providing end-to-end service across customer lifecycle. And that's where their used car business can potentially become a strong growth driver for the company. Although it's in a bit early stage to predict whether it would be success or not. But overall, I think that this is a very interesting business model worth keeping a close eye. These are still early days, but business is certainly looking promising. We'll anyway keep a close eye on their quarter-on-quarter performance. Now tell me in the comments, what is your take on Landmark Car? Is it worth investing your money? Also let me know which company you want me to cover next. And if you find this video useful, do share it with your friends. I'll see you next video. Till then, take care.